Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. It's Friday. Well, I am very, very interested to see where the S&P 500 closes today. If we have another down day, closing down into the weekend is usually not a good sign for, a bear market turning around. So, let's come in and see where we're starting at today. I'm really bothered here. First, hold on just a second, because the background here, the light is not on. It just doesn't look the same without the light. Okay. So, in the treasuries, man, oh man, they went so far yesterday. I think in the end, this was, hey, the really, really high layoffs number mattered more than the slightly good ADP. I really think that's what we're seeing there. And I do think there's like a lag between these numbers. So it kind of feels to me like what happened was like things were maybe starting to get better at the end of the summer, like September, August. And so that's why you're seeing that in some of these October numbers. But then things fell off a cliff. And so when you look at like layoffs in October overall, it's like it's really, really high. And ergo, you will start to see that decline in other jobs numbers that are kind of a little bit like that's what I think is going on. But I also think that you're seeing this rise up because the S&P just like really took it on the nose yesterday. They're coming back, and remember that this whole period over here, the beginning of October, was a turbulent period. Markets were concerned. This was, like stuff. And yesterday I made this post on TikTok that was like, is it like happening? Like, is the AI bubble like finally popping? Okay, I'm not the kind of person that's prone to like every down day doom and gloom sort of a thing, right? Okay, I know better. I've been doing this for a long time. I didn't say anything. I wasn't talking over here. When we were way, way back here, and well, I have to go back to a daily chart. Okay, when we were experiencing all of this noise, second quarter, I was just kind of like, whatever, we'll work it out. Okay, but this decline here scares me. It really does. Something's going on, and it is, from all of the reports that I've seen, people are concerned about the AI trade now. So, oil, well, they had a little bit of a down move later in the day yesterday, but nothing too significant in the game over there. Gold and silver seem to be trucking along. I'm actually kind of looking at this and thinking like, it's basing out really well. Like that does not look like a trade that is over to me, but we'll see. Silver Kappa. Okay. Pretty quiet. Japanese yen. So we had that bounce off of the lows. Haven't gotten higher yet, but the dollar is getting creamed still. So, and then we got Bitcoin. Well, Bitcoin tried to dig itself up off of the lows. I definitely saw people being like, okay, here's where you buy the dip. But you can never trust the cryptocurrency guys because they just want you to buy it. They know. They know that their whole thing is based on whether or not other people buy it, right? So that's not looking so good. And we keep having, like, during these morning sessions, sell-offs in Bitcoin along with sell-offs in equities. So, you know, if they push another new low, that could be really concerning in Bitcoin. Especially, you know, like, there's this whole thing, like, does an institution go, oh, okay, now because we crossed 6,700, now we sell? Nah, that's dumb. But retail traders definitely do. And since Bitcoin is largely retail traders in Wales, like, I think those new lows, daily lows, matter a little bit more over there. So I'm just kind of concerned about the market overall. But maybe it's just a short-term thing and they dig it out today. Who knows? But I think we'll find out today. Now, Octavia says negative gamma. Maybe. We are probably into negative gamma territory now. Let's see how bad it actually is. We're at, like, what, 6,700? Oh, yeah. We're well into negative gamma. It's just, like, all negative gamma all the way down. And we're still, like, what, 2 weeks away from, yeah. It's not until the 21st that we get options expiration. So that's definitely going to work. Now, on that note, in the treasuries, volatility is still relatively low. I keep hoping that I'm going to read a number that's 5. Because when this started, I let the default volatility be 5. And now it keeps being closer to 4.25. I wonder, by the way, if I come back here on the treasuries. Okay, when this happens, this was like, I'm looking at, like, the numbers and the levels and everything, and I'm thinking, well, if we outperformed that, shouldn't the volatility start to pick up? Shouldn't the options market makers adjust and increase the volatility? And then we did the same thing here, and you would say, wouldn't that definitely mean that they need to increase the volatility? But this was a down move and this was an up move. So actually, their pricing on the option, at least in as much as going into this option's expiration 2 weeks from now, their pricing is correct because we moved down and then back up. And we would probably need to see a more significant move up, like maybe even 2 moves up before they would start to be like, oh, treasury volatility is coming back. You know? So let's see here. I feel like everyone's looking at the same chart, and what you think you see is already priced in. Well, so first of all, I do not look at the chart to try and gather in some, like, pattern or entry signal that is going to predict the future, right? The chart is more about reviewing what happened and where we're at. Like, how did we arrive to where we are at right now, so that I can understand the current conditions, right? Like, what are the current conditions in Bitcoin? They're down 20% and they're looking at another new low. So I know that if they push those new lows, the order flow is going to be different than if I was busting a low within a range, essentially, right? I think that's information that like everybody kind of has, but it's more valuable to me because I'm going to be watching the order flow. Not that I watch order flow in Bitcoin, but you get what I mean, right? Ultimately, when I'm taking a trade, I'm trying to take all of this information and find something that the market's not seeing, right? Because the idea that all available information is already priced into the chart is not correct. It's empirically false. We go in and we look at, based on any kind of fundamental model, we have this model and we have this model. Can it explain how far we move? And you can't. No matter what model you come up with, you'll find literally every move always goes too far or not far enough. What's with that? It's not until you like combine all of the economic indicators that we have and you look at it over a 3 to 5 year time period that the market pricing that we get is really reflective of the fundamentals. So markets are not fundamentally efficient, fundamentally meaning like based on all of the information about the economy itself, until you get to a 3 to 5 year time period. So then what is the cause of volatility, and why doesn't the volatility or the moves match the fundamentals? Well, it's because what actually moves it is the orders. So if there's a change in the economy, like the jobs number yesterday, the layoffs number yesterday, right? That triggers orders. And how far it goes is actually dependent on the orders. So these guys aren't saying, everybody has this idea that's like, okay, the piece of news comes out and then they calculate the number that it's supposed to be and then they quickly go to that number. That's not what happens. What happens is they say, okay, here's the number, here's my expectations, and I'm going to buy or sell based off of that number. And depending on the number of, and at that point, it's just buy or sell. And they don't necessarily know where it's going to go. And the thing that determines how far it goes is how many people decide to make a play there and how many contracts they decide to use. So it is, if you go and you look at the move in terms of the number of contracts compared to the liquidity available, and then the amount that it moves makes perfect sense. And it's entirely, a direct result of the orders that you put into it. Right. And this becomes really, really important when you start to consider, if it's really all about the orders, that some of the biggest sources of orders have nothing to do with the fundamentals whatsoever. Right? Like here in the Treasuries, you got these people doing a basis trade, for instance. Oh man, I tell you what, it would not take too much increase in volatility in the Treasuries to the upside to upset the basis trades and really create some chaos in the Treasuries. That like we had a blow up of that once or twice in the past, and it has just only gotten worse. It has only gotten worse. So that's something I'm kind of like, if we're really going to have a recession here, we could see some fireworks in the Treasuries at some point, right? In other words, the Treasuries could go up much higher and much faster than they actually should based on the fundamentals because of the basis traders stopping out. Or like in the S&P 500, it's portfolio rebalancing at the end of the month can move the index, right? And so you could say, oh, maybe we actually are at like the correct level fundamentally. But then they do rebalancing, it's going to move us away from that. So the markets can never actually be at like, what is the fundamental price? Which actually kind of presents a conundrum, right? Because it's kind of like, if the markets are not informationally efficient, because the way that a fundamental trader thinks of things, like a value trader thinks of things, is they say, well, I'm going to look for something that's undervalued or overvalued and then trade it on it going back to value. But the whole problem is if the market's not informationally efficient, that would explain why those opportunities exist, but that would also explain why it doesn't always go back to value when you think it should. Right? Kind of becomes a crapshoot at that point. So you need something else, right? You need something that says, especially on a day trading basis, there's going to be orders right now. And it could be multiple different things. It could be news. It could be sentiment. Like yesterday, it was sentiment. That's what triggers me about yesterday. Like when the DeepSeek thing happened, that was definitely like a major hit to the AI thesis, but it did not actually change the sentiment from what I could tell. Like investors were still like, it doesn't matter. We're still going to buy it. We'll beat the Chinese. Something like that. What I saw yesterday was a shift in sentiment that was leading to immediate orders. That's why it stands out to me more than all of the other declines that we've had, at least relative to the AI trade. Right? So, going back to the question, we're all looking at the same chart, and what you think you see is already priced in. Not true. But if it's not priced in, what makes you think that it's going to price it in right now? You need something more. You need a piece of information that's going to tell you that those orders are going to come in now. And that is essentially the difference in our approach. The thing that retail traders, I don't think really understand. Maybe there are some that understand it intuitively and they don't really understand that they understand it. But what technical analysis teaches, this flies in the face of what technical analysis teaches, right? Technical analysis kind of says that the markets are informationally efficient, that all of the information is baked in there. And if it's not doing what we think it should, it just means that we don't have all of the information that the market does, right? It's kind of funny because to some extent, what retail traders do in futures trading, especially like day trading, really is like a misunderstanding of professional technical analysis. Because the pros were, looking at individual stocks or a bunch of different assets and taking trades based and managing a whole portfolio. And when you do that, then you can take advantage of this property of markets that they tend to trend over very long time periods. Not because the technical analysis actually predicts anything, but it selects the moves that are starting, essentially. And so when you win big enough. And that's how it all works, right? Retail traders took that and thought that it means it predicts something, and then built this whole mythology around it that is really, really kind of silly. It, again, is just like the end result is really quite simple. You've got to know something. Know what's going to happen. Know that there are orders. Have a piece of information that is very, very likely to predict the future orders in that time frame. It's that simple. But how you get to that point is actually really complicated. Like what is it about the markets that we know that leads to that? And how do we know those things? That's really incredibly complicated. The people that figured that stuff out are freaking geniuses. Isn't it ironic? So it's like all of that knowledge and study, and the main takeaway for a retail trader is you gotta know stuff. Know what's gonna happen. Well, I should say, by the way, at this point in the treasuries that we are getting a little bit more volatility than we'd been getting. So we've definitely seen a couple of days here where we would come in and like the range was still like 2 or 3 ticks and it's not going anywhere. We had to move up from 26 up to 29 and then back to 26. I'm thinking that it might be relatively slow until the S&P 500 starts. What are you talking about there, GDH? That one doesn't. What did you guys think about Elon Musk's compensation package? They did approve it yesterday. When they approved it, I kind of was like, well, did anybody doubt that they would approve it? You had to have guessed that they would probably approve the compensation package. More volatility in Tesla shares. Oh, I see. Blue Horseshoe loves Anaconda still. No, I'm a little bit concerned about the compensation package. Like, I'm worried that it's a poison pill, that like they will essentially destroy the company trying to reach the goals that he has to reach in order to get the compensation. Because the goals seem a little unrealistic to me. Yeah, exactly. He doesn't get the money unless he delivers. Yes. But I'm worried that the targets that they set will destroy the company trying to achieve them. By the way, don't let me forget, I got to take the kids to school today, so we got to end at 8 o'clock my time. We don't have any major releases today, do we? Actually, probably we should on Friday because, well, normally it would be non-farms, right? Normally it would have been non-farms. Yeah, we do got University of Michigan at. Oh, so you know what else? We have the New York Fed inflation expectations number. That has been a significant number in this market, so don't sleep on that one. There were some bold predictions about the robot production cells saying everyone would have one. Yeah. Well, I tell you what, if the robots could do what they're trying to design them to do, I do kind of think everybody would have one. It's just like the product that they're putting out right now is kind of a joke. So, will the technology get better? I think probably. To some extent. I think it would have to be, I think it's going to have to be several generations though. Like first, they've got to get it to where it really can do the job competently. Because if it comes in and it does the job like 99% of the time, that's still going to be like it screws up major once a week. Like, you know, that's actually not that good of a reliability. So there would have to be a very dramatic increase in the reliability, which is maybe not possible given the way the current models work. Like there's some inherent statistical inefficiencies in there that you can't get rid of. But then I think it would also have to do it efficiently. Because, man, if you watch these videos where, like, the robot can, like, wash the dishes, and I find it frustrating to watch. It's too slow. It's too slow. I can't handle it. Kind of reminds me of the early PC days back when trying to imagine a computer on every desk. I don't know, man. When I was a kid, I had an 8088 and a Pentium 1 as like a 3 and 5 year old. I'm telling you, I've been a computer geek since basically before memory starts. And there was never any doubt to me that everybody would have a computer. Like when I get to school and we were using computers in school, like the Macintoshes, they'd have a Mac 1 and they were like green. The monitors were like green. And there were kids that didn't have PCs and had never used a PC, didn't know how to use it. That was shocking to me. I thought everybody would have one. There was never any doubt that eventually everybody would have one. I to me, it was just the utility and entertainment of it was unquestionable. Well, I do kind of think that will be the case with robots too, if they get them to the right spot. But the issue with Tesla isn't that. The issue with Tesla isn't that whether everybody will want a robot or not. The issue with Tesla is whether everybody will want Tesla's robot. And like, there's the problem, because it was Whistle and Diesel had a video this week or whatever where they had one of these robots. Like other companies are already selling them. So what makes Tesla think that they're going to be the ones that really get the breakout product and that they will dominate the market share? Like, I really don't think that they're going to be able to do it. I also how do I explain this one? I'm starting to wonder if the kinds of market caps that we see amongst really big companies like Apple and Google and whatnot are a temporary aberration that will not be able to last. And the reason why I say that is because I'm starting to wonder if the ability to actually have a real moat, if we're a business, is declining. It really is starting to turn into, with a lot of tech things. Used to be, you had to put so much development into it and developing certain technology and stuff. Nobody else could do it. But that is quickly going away. And I'm thinking that in 5 years, you'll have a company and they'll come out with a robot that, they've made the big changes in the model that allows it to be a practical thing that everybody's going to want to buy, and they bring the price down to where everybody's going to have one, that it's like the price of a car or less. And there will be like 15 other companies that will be able to do that too. Right? Like, that kind of seems like the world that we're going into, which is a little scary if you're any kind of an entrepreneur. Like it was already kind of like that with startups. You'd have some software as a service idea, and there would be like 2 or 3 other ones that were doing the same thing, and the one was just the one that like worked the hardest or something like that. Let's see here. On the other hand, buyers are perfectly capable of ignoring that and moonshotting the shares anyways. Oh yeah. By the way, how far did it go yesterday? How did it do yesterday? Let's go look. I'm certainly not arguing that one should short Tesla. Okay. So there was like a big spike when it happened, and then it all just kind of meh, and then they moved up, but we're still on the downturn going into the open with the rest of the market. But Tesla is up near all-time highs. Yeah. In another circumstance, I could see them like moonshotting it, but if the rest of the market is going to decline, they're probably going to get pulled down with them, if not be one of the biggest losers. So we'll see how the rest of the market goes. When does the AA bubble burst? Well, I what I've been saying is I think it might be doing it right now. I think we need a couple more shoes to drop for this to really, really turn into the big one. But we're seeing the stuff that we would need to see for it to start. The sentiment has shifted. People are watching the things that OpenAI is saying and doing, and are realizing that OpenAI is really insecure and frankly a little bit scared of the commitments that they've made. And the whole ecosystem seems to be just based on them investing into each other. So this sentiment shift is a significant thing. There are certain levels on the downside that we would have to breach for it to become a wider thing. But you're getting the things that you would need for it to start. Yeah, if something happens to OpenAI, the house of cards will come down. Well, it's not even, I don't even think it's necessarily that something has to happen to OpenAI. Like, keep in mind, they made $13 billion last year, and that was a loss. And they have made over $1 trillion in commitments that they're going to spend. So what's going to happen? Probably at some point, they're going to have to admit that they can't meet those commitments. And then the companies they made those commitments to, that's expected revenue that they're not going to have, and then the market's going to adjust accordingly, and it just kind of all unravels. Right? That's what's scary about it. It's not that something has to happen to OpenAI. It's just OpenAI has to not perform as well as they are projecting, which is almost certainly what's going to happen, right? And in this situation, I know I probably sound a little bit like self-contradictory, like I'm going on about how prices aren't fundamentally efficient and things like that. But then I'm talking about like that the prices matter. But I think in this case, the prices matter because this whole thing is based off of valuations, based on like the value of the stock, the value of the company. So if these prices go down, you know, if asset prices go down, it hurts the whole bubble. So I don't know where that level is at, but there's a kind of a point, excuse me, where the momentum players start getting involved, and this just turns into a real doozy. And I'm kind of a little worried that like the like when things really start getting scary will be like right around Christmas, right? And then seeing all of the layoffs is like another thing on top of that. Because the amount of layoffs that we saw was like the most that we've ever seen in October since like 1992 or something like that, right? And then like overall for the year, it's been the most layoffs that we've seen since basically the financial, like 2008 financial crisis. So if the trend in layoffs continue, then we also cross over this line where it becomes a self-reinforcing thing and you will have a recession at that point. It's when too many companies lay off at the same time. So there's a real risk of that happening this quarter. And if that happens, that would just be another log on the fire. Not only is just the AI bubble collapsing, but like the whole market is collapsing. It would get ugly. It would get real ugly. And you can just see like the CFO talking about a government backstop because she already knows that it's not possible for them to meet their obligations. When David Sachs yesterday was like tweeted, yeah, there's no way we're going to bail anybody out because we have like 5 models, and if OpenAI goes under, everybody just switches to a different one. We all use Claude. Something like that, right? And I was so, oh yes, exactly. You're saying the right thing. Can you imagine we're having an AI bubble pop / recession, and then we have to do a government bailout because I'm telling you, every time that we have an economic crisis, somebody gets bailed out. Who are we going to bail out this time? Is it going to be artificial intelligence? Oh, can you imagine how bad politically that would be? Like if you thought people were mad about how the 2008 crisis bailout went, to bail out AI. You're having a crisis because these AI people were stupid and overpromised, and they're trying to replace the workers, and then you're gonna bail them out? No, sir. No, sir. So David Sachs said the right thing. And you could see it like when that tweet came out, man, that they were already doing pretty bad that day, and they inched a little bit lower. Like they didn't like that. Bailing out AI would really make a lot of people turn on the government. You know, I really wonder. I'm going to make a TikTok about this later today, I think, but we can talk about it here. Like, it just surprises me sometimes the people out there on the internet or whatever that just don't seem to know these things, don't know what's going on, that really seem like they should. Like, this whole mom dommy thing is very troubling to me. Why is it that the most educated, supposedly the best educated people among us seem to be completely ignorant of the economic calculation problem, the necessity of markets to even understand what supply and demand is so that we can make decisions? They don't. What's with that? Well, I've heard different theories. A lot of people think, you know, this is the insurgent class. These are the people they want to aspire to be the capital, you know, like the truly rich, right? And so they think that in a socialist society, they won't be the ones working the mines, that they will be in charge, and they will be living high off of everybody else's labor. And so they don't really care. They just think that it's going to be good for them. But I don't think that really makes sense, because if you really understand why markets are necessary, then you would realize that doing something like that, like maybe you will be in charge, but you'll be in charge of a shithole. Like, it won't actually be a good life. So I don't think that one makes sense. It kind of seems to me that what has happened is we have educated a class, like, we've created a class of people that are overeducated, but they are particularly overeducated in things that are not very useful to society and like understanding the financial system specifically. I don't see people in the financial sector going like, oh yeah, communism, that'd be great. They all know that that's dumb. But if you like did gender studies, right? Because the reality is you've got people that never really actually lived in the real world. They basically, things didn't work out, and so they were protected from it. They didn't have to go out and live in the real world. They're not living great, but they didn't actually have to go and interact with these things. Because, like, what are the things that I would consider like living in the real world, right? Owning a house, having children, getting married, these sorts of things. These are the sorts of things that teach you. You start to learn about the systems and the way that things, way that things work. You know, then you start to understand. Or running your own business. That's the other big one. Running your own business. Especially when you run your own business, then you start to see, like, you need the market, right? Like, we could draw a picture, like a graph. Always have to have a graph, right? Wait, where's my pen? I keep shutting it down. There's a problem with the pen where if I leave it open for too long, it doesn't go well, so I have to turn it off. So if this was like your understanding, what should we call? I don't want to write it out. This is the y-axis is your understanding, and the x-axis, like your understanding of the market, and the x-axis is like how much money you make a year or something like that, right? Like your position in the economic hierarchy. I think there's like, okay, the very, very poor, they don't understand anything about the market. And then there's kind of like the somewhat poor, they don't know anything about it, right? And then there's this spike. Well, let's not say the very poor. How should we do it? Well, let's do it like this. Okay. Man. It's gonna take me a second to do this properly. Okay. If I were to make a graph that is like your economic understanding relative to how much money you make, we're going to say like these are the poor. These are working. Okay. Middle. And then this is maybe not going to be exactly like how much money you make, but here we're going to say these are small business owners, SBO. This is college, or let's call them academic class. And then you get into the investor class. Government class, right? So I feel like that the poor, they kind of don't know anything, and often that's why they're poor. And then it just kind of goes up here, like the middle class, they maybe kind of understand it a little bit. And then small business owners, they know it a lot. And then the academic people are like know just as much as the poor. And then, right? So there's like this gap here where these people have been protected from having to live in the real world, and ergo don't understand the necessity of markets and are enticed by these communist ideas. So basically, and I think it bothers me particularly because I think this is where I fit. I think based on my history and everything, my dad was a salesperson. He made pretty good money relative to other people. They paid for school. I was not the type that like went and got a master's degree and all of that sort of a stuff. But you know, when I didn't go to New York. So I'm like the lower end of this class of people, right? So I know a lot of people that were kind of in this, and I can see how it's gone, where especially all the people you see on Reddit, right? Where it's like, they never had kids. Well, they never got married. They never had kids. They never owned a home. They never did any of these things that kind of help you start to understand that, like, there's limitations to what the government can do. They often screw things up. You're often just at the mercy of it all. And in order to even know what's going on, there has to be a free market. Like, it has to be a decentralized information collection machine. Small business owners understand it because their whole livelihood depends on it. And you know, I think there's middle class people, they were taught, they understand it. But it's like this academic class, which is like all of the millennials that live in New York, right? That they learned the wrong things. That's what I think. That's my theory for why it's going the way that it is. Probably other theories, all right? What's the category after the poor? Oh, the working poor. So there's the people that are like, you're poor because you're taking care of grandma, and or you are disabled, right? Or you just live in an area that is just poor, and there's zero opportunities, right? So there is like the true poor, and then there is the, you know, I graduated from high school, but I didn't go into a high paying industry, and ergo I'm probably never going to make more than the median wage, right? And that's where I kind of put those people versus the middle class and the small business owners is kind of where you get into like maybe lower level tech workers, right? Versus the guy that owns his lawn care business, right? So that's where you're getting this effect, I think, from like, you know, these guys that are Trump voters. So we say, well, it's the people with the most education. It's the people with the masters and the PhDs that seem to be supporting the communist bullshit. And these guys over here, the small business owners, they left the Democrat Party because they saw what was going on and they didn't like it. There's a whole subsection there. Because really Trump's strength has been the working poor, right? Or we could just put it more simply. They learned a lot of useless stuff. Isn't practical for them. You know, they say that like millennials, you know, you get older as you're saying that wrong. You get more conservative as you get older, but it's not happening to millennials. It's because it's not getting older that makes you more conservative. It's getting married, having children, owning a house, starting a business. That's what makes you more conservative. Because the more that you do those things, the more that you get into really serious responsibility, the more that you start to realize how complicated everything is and that we don't really actually understand it. That's what it is. The more responsibility you get, the more you are subject to the nature of complexity. And you will try doing things and they won't work out the way that you think that they should because of complexity. And you'll realize, oh, well, we kind of have a way that things are done because people figured out over thousands of years that worked, you know, it just kind of naturally arose on its own for whatever reasons because of these things about complexity that we can't see ourselves. And so sometimes you just kind of have to, that doesn't mean that you don't try and improve things, but like you want to start from a base, like the best base that you can, and then make slow intentional changes and really see what the effect of that change is, right? And that's conservatism. versus let's just tear the whole system down and rebuild something new. Liberal. And you only want to do that if you don't have any experience. So once you gain the experience, you try tearing the whole thing down and putting it back up, and you go, oh, that didn't work. We had that revolution, and like everything's a shithole now. Big Toasty says, I implemented a new function for my DOM to see imbalances. No idea why all the DOMs don't have this. You mean like an imbalance, like the way that a footprint chart does? Yeah. So like, when I just look at it from the perspective of a footprint, you know, they always have this thing like, when there's an imbalance here, is that like a signal to go long or short? Well, the footprint guys, they will talk about that a lot, but for some reason they never talk about it as like an entry signal or anything like that. Because my observation is that an imbalance in one spot is not really very indicative of what's going to happen. So I kind of doubly question how much value it would have just in the DOM itself. Because where I'm coming from is, I really think that you want to be looking for those large meta orders and trying to front run those large meta orders. So part of that is being able to anticipate that it's going to happen before it happens, right? And then when it does happen, what are you going to see? You're going to see a long, persistent imbalance. So that's why I really think that the best technical way of measuring that is running R squared on cumulative delta. Basically, is there a persistent trend in the direction of cumulative delta? There is today, by the way, in ZN. It's been persistently buy, and we're moving down. So, persistent trend in cumulative delta in ZN to the upside, but not very strong correlation between cumulative delta and price. So, no trade. We also reached the bottom level for the... Well, I guess the persistent up move in cumulative delta and the possibility that the S&P 500 could sell off again today. Although I kind of feel like that if the S&P sells off today, that it's going to be more like it's kind of slow most of the day, and then they really sell off into the close. But I suppose that combined with the fact that we're touching the overnight session projected range, I could maybe justify a buy here. I don't know. Okay, I want to read this story here, because I kind of felt like I had an experience like this too. But let's see if his experience was like mine. Oh, what's that? Oh, it's just the... I've been on a lot of interviews recently given the job market. However, I had an experience recently which was very surprising and, to be honest, very demotivating for me. The first round in the org went extremely well. The recruiter also shared very positive feedback. So for the next round, I prepared more because it looked positive. The interviewer was coming off as very rude from the start, but I was keeping my cool and responding calmly because I'm generally that way. He was probing my experiences, which I felt answered well given that I have been on so many interviews. Then he suddenly said, "You're so terrible, I can't imagine you ever aspired for X role." It shook me instantly. I could only pause and say, okay. Oh, wait, let me backtrack here a little bit. The interview. I was keeping my cool and responding calmly because I'm generally that way. He was probing my experiences, which I felt answered well, given that I had been on so many interviews. Then he suddenly said, "You're so terrible. I can't imagine you ever aspired to expert." It shook me instantly. I could only pause and say, "Okay." I said I needed to drink some water. I turned off the camera because obviously I welled up a little. I had to gather myself, continued the interview. However, this tone did not improve. He was constantly berating me, so I just chose the end of call without any questions. I've been on so many interviews now that I think he is right. I think I am actually so terrible at whatever I am doing, or maybe the entire interview process, that I can't bring myself to apply for another role now. I don't know if this is the norm now because I've interviewed people and have always been nice to the candidates. Is this normal? Am I the problem here? Yeah, I've experienced that, and it's a certain type of guy that does that, and I kind of think that he's intentionally doing it to discourage people that don't meet his certain desired characteristics, like he wants somebody from his ethnicity or things like that. Seriously, I think I've seen that before. What does the comments say here? Some people just shouldn't be interviewing. There's definitely a peers gatekeeping sort of issue.
Block cell.
Well, looks like we bounced hard off of that. That's a little bit faster than I thought it would be. Today, no NFP, no NFP. Government's still shut down, so I guess we don't get it. There is a, so they need like 10 Democrat senators to come over to end the government shutdown. And I guess they have like 8. So they need a few more people still to cross over, I guess. It's like they have 8, but then Rand Paul also won't approve it. So that means one other Democrat that they need or something like that. So how come we got... Because that doesn't come from the government. That's a private report. It's made by Challenger. Someone in Christmas. Like the name of the company is Challenger blah 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 in Christmas. I forget the other guy's name. It's an interesting thing. So yeah, it was a pretty clean, it was a very clean bounce, Susie. I regret not taking it. You know what's kind of weird is I described the whole setup there, didn't I? I don't know if you were there. It's just, you know, so you were kind of quiet during the time. But I said, well, cumulative delta has been consistently to the upside the whole time, and we're at the volatility projected range down here at the bottom. So, but cumulative delta and price aren't in line with each other, so, but still, cumulative delta, delta up and being at the projected range probably was enough to take a trade. And it just didn't even really, you know, it just didn't flick the switch in my brain. It didn't tickle that one nerve that says you should take a trade on this, Seth. I don't know. A little less confidence. Well, I mean, maybe there was that too. Like if price and cumulative delta had been in line with each other too today, then I probably would have been like, oh yeah, we need to do something here now. But I don't see how you would get down to the lows like and be in a situation like that. So that one doesn't really make sense, right? No, I think it was that, yeah, it was just we have to activate the gambler is what it is. It just didn't dawn on me for some reason. Like, honestly, shouldn't I be saying every time that we get to one of those, maybe I should take a trade? Especially the other thing that we got going is volatility is still low, and I kind of expect it to be low today. So then we really should be taking the upside. Now, the second half of it, though, is where would you take it off at? So we could take it off at the inventory cost basis lines, but that would have gotten us out at 26. We did touch 27.5, I believe. No, we touched 28, in fact. We touched 28. So what I could have said, one of them is like, you know, you get a trend like that, and then it comes back 2 ticks, then that's an okay place to take it off as well. So, yeah, maybe could have pulled that off. That would have been 23 to 27, maybe? Let's say 23 to 26. That's 6 ticks. That's not bad. Yeah, at least perk up a bit. Yeah. I don't know. You can definitely see this thing where, like, when you start trading, like, you really start to get driven by taking trades, right? Like, the whole thing, I feel, is designed and geared to get you to trade, because that's how your broker makes money, is the more that you trade. And as time has gone on, I feel less and less incentivized to trade, because I know that every time you trade, that's like you could lose money, you know? So now when I'm driven by something else, I miss really good trades that I should be taking. There are always opportunities. Well, the thing that I like about this setup, I know I've said this a billion times, but the thing that I like about this setup is that it does well in the regime that I struggle with the most. When the market is really slow, I have really learned to just tune everything out, because I've gotten sliced and diced up so badly in those situations in the past. Now that you have something that's a pretty good guide in those situations, I actually kind of think that I could do better in the low volatility times than the higher volatility times with that one change. So I'm gonna have to change. I'm gonna have to rewire myself a little bit, huh? Oh, another thing that I probably, I wasn't considering, but I should have considered, is that was only like 30 minutes before I'd have to go. So that was another bit. Recruiting firms have become the new used car salesman. Yes, they have. What are your thoughts on a trader's intuition? Well, you build intuition. Because what intuition really is it's the neural network of your mind taking in a wide array of inputs and coming out with an answer. And you can't necessarily explain what's going on there. It's a kind of an interesting thing. There's this whole thing about consciousness. And they're like, where does consciousness come from? Is it an emergent property of the network that when a network becomes sophisticated enough, it becomes conscious? And so the robots just need to get a sophisticated enough network, and then they'll become conscious. But then people will say, yeah, but like there has to be like neurons dedicated to that introspection thing. And then there's this other interesting thing that like one of the things that will really, that is like a sign of high intelligence. And this is one of those things where I say, like, I think that I'm really good at this, and that's part of why I think that I don't think that like overall on most measures of intelligence I'm particularly gifted, but on that one I am, and that would probably be the thing that would make me outperform on an IQ test if I were to take one, is the metacognition part of it. That you can look at how am I thinking, or how are other people thinking, and what are other ways to think of, right? So, like, metacognition is like one of the key differentiating factors of consciousness. Does that mean that some people are more conscious than others? I don't know. I digress. There are still parts of your brain, though, that you are not conscious of. Right? We have this idea that consciousness is like you can observe yourself, sort of a thing, but you actually cannot literally observe everything about yourself. There are things in our, it's that fast network. It's designed to be able to handle social situations. That's how I'm able to talk to you, interpret your question, come up with an answer, and I'm not consciously planning it out. I'm not saying, okay, so he asking this question, and here are these. How do I formulate all that together? I'm just doing it on the fly. And how am I doing that? It's because you have that frontal neural network that is basically designed to give you answers very, very quickly. And these are the same kind of networks that large language models work off of. So it's a very, very interesting thing to think about from that perspective, because then you go, okay, when you compare them, now you kind of understand, okay, the things that LLMs are good at are going to be the things that my own intuition can potentially be good at. And the things that the LLMs are not good at are the things that my intuition is not going to be good at, right? But that's what you're doing. And you can build this intuition. You're coming in, you're watching the DOM every day. So you're building an intuition of the DOM, and then you're watching the news headlines, you're reading all of the information and watching how the markets react to that. And you're going to build an intuition of that. So I had somebody that's been asking me a lot of questions on Reddit, which is kind of interesting. They're sort of like, why do they keep asking me so many questions? But then I realized but it's in chat, and I'm giving him like the shortest answer, just because I'm texting, right? There's mystery to it. It makes him want more. Maybe part of my problem on the YouTube channel is I give you too much, But anyways, he was asking, with the news, how is it that how do you know that Donald Trump tweeting about tariffs is supposed to make the market sell? I don't know how I can describe that. Isn't it just obvious? Isn't it just obvious that the market doesn't like tariffs? Well, it's obvious to anybody that's been sitting and watching the market, right? But the reality is that you and we don't even have to think about it because we've built that intuition, right? So you can intentionally build intuition. And that's kind of the key here, is that what most retail traders are doing is they're spending all of their time looking at a chart. And so the intuition that they're going to build is all based on charts, which is nonsense. And really, you need to be building your intuition on things that you can actually do well with, right? And that usually means, okay, especially things with lots of inputs. That's the place where these kinds of models are really, really good, is that you can take 100 different things and then come up with, in this situation, this one matters, and in this situation, this piece of data matters, and fit it all together. That's what neural network decision trees kind of systems are really, really good at, right? So that's where you want to try and build the intuition. And it's just it's about focusing on it. You are studying the thing, make note of what happens. You can write it down if you have to, right? Retrospect over it, sleep on it, and then think about it the next day. And that's really what we're doing here especially at the beginning of the stream. So I'm remembering what happened yesterday and then catching up on what happened overnight and remembering the key significant events that seems to have been driving the markets, right? And that's how I developed that intuition of it. Until you get to the point where, sometimes I remember this one time before everybody realized that Trump tweets could move the market so much. I see a Trump tweet come up and I'll read it and I'll go, oh, you sell that one. And then maybe 10 seconds after I took the trade, the rest of the market figured it out and moved. Yeah, right? I just developed the intuition. So I think that intuition is a very important thing for a retail trader to develop, because that's the thing that's like the edge. That's hard to duplicate. That's going to make you fast. That's something that we can still do better than the robots. So intuition is extremely important. Just realize it's important that you develop your intuition. That you're looking at the right things in the first place. I was going to make a video about that, and I kind of forgot about it. One of my issues I'm having right now, well, I haven't really had a whole lot of time to make a video, but I'm also having a hard time deciding what videos I would care to make more. And that was one. All of this stuff, well, let's make some videos about AI. Let's make some video about intuition. Actually, did I make a video about intuition? I think maybe I made the video about intuition. Maybe not. Let's see. Asset class, spectrum, starting count size, micro positions, trade without price. Oh yeah, I did. How to develop trader intuition. I did make it. Wow, that video actually didn't do very well. What's this, Big Toasty? I think you're the most consistent trading streamer. What do you mean by that? Like in terms of I'm here every day? Or like I've been here for what, almost 10 years now? Or is it consistent in what I say? And yeah, I did make a video, so you can go and watch it. How to develop trader intuition. It was a good video. That you're streaming every day. Yeah, well, do some of these other guys that got really big, like Matt, isn't he there every day? I don't know. You know, the thing that weirds me out after all of this, they start hiring people to stream for them now? Are you for real? Well, I could actually see that happening. Like one of the things is that, oh, okay, sorry, we're getting the 8 o'clock news. University of Michigan, 1 year inflation 4.7 versus 4.6. 5 year inflation lower than expected, 3.6 versus 3.8. So that could, I think that would actually move us up to see the 5 year inflation number be down so much. It was 3.6 versus 3.8 and versus 3.9 the month before. But it's probably about equal to like the amount that we already moved up. So yeah, anyways, there's this whole thing that like I can't affect the market. Like I was thinking, we were talking yesterday, there was a place where I made like 10 ticks of slippage, and like I got hit at the very top, and like when you look at the whole situation, like it just doesn't make sense. Like, why did I catch 10 ticks? How is it possible that you catch 10 ticks of slippage? And I do wonder if it had to do with me streaming. Yeah, and there's just been too many kind of odd things like that I'm just realizing, even if you only have a few dozen people watching you, like on a really, really short time frame, and we're only talking about ticks, that market can absolutely mess with you. So if you really became a big streamer, then it absolutely having the big stream could negatively impact your trading. It absolutely could. And so it might make sense to have somebody else stream for you so that you can focus on your trading. But I'm not sure why that would make sense for somebody like Nat. Like, surely they do better from their streaming. What else would he be doing? Unless he's going on vacation all the time and stuff. I don't know. But that's a little interesting. Huh. Gambling off streaming. Well, that's another thing is that every time that I've been like, okay, I have this position, it's not really working out, but I'll just keep it and we'll see what happens, and then I end the stream, and like, there's been times where it's been really bad, and there's been times where it's been really good, but the times where I've been like doing it live were always really good, and I don't. What's with that? It's like they're watching you and they don't, you know, I think of it as like there's somebody at JP Morgan that's executing large meta orders, and they're like, well, if Seth is catching on to it, that's not a good thing for me. So I've got to wait. Like he can be my indicator that like now is the time to actually make the move. Is when he gives up on it or things like that, right? So now, maybe I'm just paranoid, but I think that there's like a mentality shift there that is actually useful to your trading. Like if you really think that the market is going to react to everything that you do, because in a way it kind of does because of the square root law and everything, right? That's going to change how you trade. You're going to say, I'm not going to take a trade unless I know that anybody else, if they knew what I knew, they would have to be a complete idiot to trade against me. And that's going to cause you change the situations that you decide to take plays in. So it helps you in the end to be paranoid, I think. Anyways. All right, it's time for me to get going to get the child ready for school. So I will see you guys on Monday. In the meantime, stay